Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about beginner options, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy guys.
Let's talk about what staging a trade is all about. So in Thinkorswim, first of all, they have two separate tabs, or a tab called the Analyze tab. And then they have another tab called the Trade tab. Now they're very similar in that they both offer two different similar things. The Trade tab lets you go right in and place a trade. The Analyze tab lets you set up a trade and then look at it and then decide whether or not that's what you want and then place the trade. I never work in the Trade tab. I always work in the Analyze tab. All right, so that's the first thing. And the reason why I always work in the Analyze tab is that it's kind of obvious. It gives me time to look at the trade, make sure it's exactly what I want, maybe compare it to other trades before I make a decision. When you go directly to the Trade tab, you got to know exactly what you want because you go in and that's done. It's in the market and you can't, that's it. So very rarely use the Trade tab. I always go into Analyze first because I want to analyze the position, and that's another word for staging it. Staging it means that I'm creating the trade, getting it set to put into action. That's what staging means. All right, is that clear?
That's clear. That's clear. You have staging. After you analyze it, then you go, you place it.
So that whole process of analyzing, that's what I refer to as staging. All right. And it just makes sense. It's if you're building a house or you're trying to frame a door, right? I don't know if you've ever framed a door before, but it can be a pretty complex process. And if you don't get everything right, that door is not going to shut no matter what. You have to do a lot of measuring and leveling and shimming to get everything right just so that it will close perfectly. And so that's basically what we're doing inside the Analyze tab. Okay. We're doing all that measuring and shimming and making sure everything's right before we execute it. So I'll give you an example of doing that. So the first thing that I do when I'm doing a trade is I want to get all the information that's going to tell me how big I'm going to make my trade, what direction I'm going in, and where's the opportunity going to be. So once I know how big it is and what direction and the opportunity, I can set that all up in a chart, and I can set it up in my analyzer, get the trade ready, and then I can watch and wait for that event to happen when I'm going to get into the trade. And when it does, I make the final adjustment to my trade, and then I send it to the market. That's my process. Yeah. Do the analysis, do the setup, wait for the event, do the final adjustment, send it to market. So the analysis part, I do that every morning. So every morning I put stuff in the Discord, and it's my morning analysis. And you have to read through it. I don't always put all the information in there. On most mornings, I'm putting the same information. And if you go back, you'll find that we have years and years worth of me doing this. Very few days have I missed. I have missed a few, and they've been in the past couple of months. I've probably missed maybe 3 or 4 days in the past 3 years.
Be consistent.
And try to be, except for the last month or so, which was mostly because I went on vacation.
That's when I catch you.
Yeah. So the very first thing I do is the analysis, and we do that in our trading view. And I have everything that we do is mostly based on, first, the VIX, the volatility index.
Yeah, I didn't get to this level yet, but go ahead.
That's okay, because when we have another meeting, I'm going to show you how and why we use the VIX.
Thank you.
Because the VIX is going to determine, well, the speed and the amount of premium that we want to collect. The premium is what we're after in a trade. And the VIX is going to help us create a trade that will maximize our chance at collecting that premium. And essentially what it means is that when the VIX is very high, we have very wide butterflies. When the VIX is very low, we narrow our butterflies to protect from that risk. Now, that's almost the opposite of the way most traders think. They like low VIX. They think that's a safer environment. But from an options trader's point of view, it's a much more risky environment. And a very volatile environment is actually much safer and more profitable for an options trader. So it's almost the exact opposite of the way most traders think.
Okay.
All right. And that's because of the way of what it does to the rate of premium decay in an option. High volatility gives us more potential. Low volatility gives us less potential. So we have to adjust our trades for those two different conditions. All right. So in my VIX chart, you'll see that I've marked it up with all kinds of stuff. But this is essentially my playbook telling me what to do when the VIX is high and when the VIX is low. And you'll see over here on the right-hand side, I've even characterized the different levels of the VIX, Zombieland, Goldilocks, and Chaos. And then I have these blue lines that kind of delineate those different regions. And you'll see right now where the VIX is. Here's the current price of the VIX right here in the lower right. And the price of it is over here at this yellow. It's saying it's 15.19. That is definitely in Zombieland. Zombieland is anything below 17 on the VIX.
Okay, so this is the preset.
I just took the VIX and I draw on it. That's all I do.
Okay.
I draw on it so that I can illustrate my playbook, the criteria that I'm going to use to determine my trades. All right. So you can do the same thing, or you can copy this. You can create your own VIX chart and mark it up just like mine if you want. A lot of people do that. A lot of people also wait for me to just publish it.
I do both. Right? I do both.
That's good. That's exactly what I want. So you'll see different types of trades also. These are all for 0 DTE trades, by the way. You'll see different types of trades. You'll see my classic out of the money with guide range. That's this thing on the left. You'll see the Batman, and this is telling me what to do with the Batman. Those are butterflies both above and below the market at the same time. That's what a Batman strategy is. And then you'll see another type of strategy we call time warp, which really only comes into effect when we have very low volatility. The Batman really only comes into effect when we have very high volatility. The regular classic butterfly, the classic out of the money butterfly, we can trade that at any point, whether it's high, medium, or low volatility.
Oh, I see. I see.
And then where volatility is will determine how wide we're going to make the spread on that butterfly, how wide the wings will be. So you can see as as volatility goes higher, we go much wider.
Wider, yep.
And
50 plus,
and as it gets lower, 50. We go narrower. So that's the very first thing I do every morning. Don't worry about this up at the top. This is something completely, it's related, but it's too much information right now.
For now, okay. Yeah.
All right. So we can see the VIX this morning is at 15.24, 15.24. It's below 17, so we should be choosing butterflies between 20 and 30 wide.
30 wide, yep.
So now I know how wide I'm going to make my butterfly. The next thing I want to do is determine, am I going to put the butterfly above the market or below the market?
Okay.
In other words, am I going to put on a call fly or am I going to put on a put fly? Am I going to put on a bullish fly or a bearish fly?
Okay.
That's the next thing I want to determine. All right. So I know how wide it is, and then I'm going to determine whether it's bullish or a bearish fly. So I go to my next chart. Go ahead. Ask a question.
Okay. Okay. I don't know if I want to wait later, but I was trying to make sure also the difference between the call fly, put fly, and the bearish. I know the bull I know is going to be going up. The bearish going down, but I don't know if that's something I need to get the understanding now or just wait later on.
Yeah, so if I'm going to put a butterfly above the market, what I mean is when I say above the market, I mean above the current price of the market. So I would be putting it above the market because I'm bullish. I'm expecting the market to go up into my butterfly.
Okay, because you understand that the market is going to go up, so you put it up, hoping it's going to go to your point, yes.
And if I think it's going to be bearish, then I'm going to create a put fly, and I'm going to put it below the market price because I'm expecting price to come down to my butterfly.
Okay, I see. I see.
All right. So I need a simple way to tell me whether it's going to go, whether the market, I should be bullish or bearish. Now, I want to be very clear. Just because I'm doing this doesn't mean that I think the market's going to go up or down.
It's an educated guess.
Yeah. In fact, 50% of the time when it's pointing bullish, it will go bullish, and 50% of the time it will go bearish, even though the indicator says bullish. And same thing if an indicator says bearish. 50% of the time it will go bearish, and the other half of the time it will go bullish. So you really don't know, no matter what you do. But there is a very specific reason why we do that, because by using this trend analysis and trading with the trend, those moves that tend to go with the trend tend to be bigger than the counter trend moves. Okay. And by going with the trend, even though it's a 50-50 shot, whether it's going to go up or down, the ones that are going with the market tend to be bigger. And if they're bigger, that means then I'm going to have a better chance of making profit. So that's why I go with the trend. Now, every once in a while, I'll look at the trend and it will say, you should go bullish today by the trend analysis that I'm using. And it's a very simple trend analysis. The way I do it is I use this moving average. That's the blue line that you see here. And if the market is above it, I go bullish. If it's below it, I go bearish. So if the candle, if the very last candle is above or below, that will determine whether I'm doing a call fly or a put fly.
Oh, well, this last candle here, I can see the red one here. Yep.
Yeah, I'll point an arrow to it. It's right there.
Yeah. I see it. I see it.
You can see the last 3 days, 4 days, I was going bullish. And maybe this day right here, I was maybe going bearish. And then this day and these days over here going bearish. But they've been really very close to the moving average. So they haven't been giving totally clear signals, but I just go with whatever the trend is.
Okay.
Now, this is just one way of doing a trend analysis. You could come up with a different way of doing it, and that would be equally as valid as long as you stay consistent with it. All right. So I'm just showing one way. And in fact, I've shown at least 4 or 5 different ways in this service of ways to do it. But currently, over the past several months since near the beginning of the year, I've been doing it this way. It's either above or below. All right. But today was a very special situation where I evaluated the market. And I don't know if you've been doing this. Do you watch my morning live stream that I do every morning?
Yes. Every morning I watch it. I did watch the all through video you had today. 2 of them are advertisement. The other one is, yes, so we talk about the market. Oh, yes.
So this morning I gave a different analysis. I thought over the next several days, the market is likely to go down.
Yes,
now, I don't
yes,
know
I
if
see.
it's going to go down. And I'm not predicting it. I'm just saying that there's better odds for a downward move than an upward move, mostly because of the volume situation. Volume was running out as the market's moving up. It's like all the traders in the market are saying, yeah, it's going up, but we're not going to play the game anymore. We're going to sit on the sidelines. And you can see that very clearly just by looking at volume, that it is running out. And so that means typically what that means is that when a market's going up, that means one of two things. Either it's getting tired and it needs to pull back, or it's getting tired and needs to re-energize before it goes up further. So it's either going to pause and go up or pause and go down. One of those is going to happen. And then I look at that trade and I say, are my odds better with it going up or down? And can I get a better price for going up or down? And so I put all those things together and I say, I'm getting a much better price if it goes down. So I just said to everybody, I said, look, I think that there's a better play to just play the downside for the next few days. I think that, and I'm going to put on a bet that's super small if it goes up and against me, and I won't lose hardly anything. But if it goes for me, I'm going to make a lot of money. So that's what I did. I said, okay, we're going to go against, it's right on the line of whether it's bullish or bearish. I think it's going to be more bearish. So I'm putting out these bets that it's going to be bearish. I got lucky and it's starting to go bearish. So what I did then is, okay, I'm going to say it's going to go bearish. Now I have those two things, how wide and which direction.
That direction, yep.
All right. The next thing to do is to look at what's going to be my reason for getting into the trade. Now, this only comes into consideration for a 0 DTE trade, not necessarily for all trades, because some of them where we might use volume profile or not. But for a 0 DTE trade, we always use volume profile. And that's what you did. Remember, you marked up the volume profile to see where the levels were. So I'm looking for a reason to get in. And for me, that reason was when price went up and went down. It went up and went down very quickly, up and down. That was my reason right here, right there. And it was near a structural level, although the structural levels are really hard to see up here, but it's somewhere in this area. That's the top of the market. I'm looking for some kind of pattern that's going to give me a good confidence that it's going to turn. And so right there is where I determined it was. And so I got into the trade. So I put a put fly way down here.
Okay, if you said you put a put fly all the way down there, that means that's the price. That's where you choose your price.
Right. Now, I don't choose the price. I don't choose the level. I do choose the price, but I don't choose the strikes. The strikes choose themselves based on how much I want to pay.
Okay. But here, that's where you're going to pay. That's where you're going to determine to how much you want to pay. Way down there. Yep.
So the way I do that then is I open up my platform to the Analyze tab, and I'm just going to close some of these others so that they don't get in the way. That's some more analysis that I'm doing. And I go to add a simulated trade, which brings up my options chain. This is where I select the strikes and select the strategy. And I try to get somewhere, let's see, where is the middle?
This is what you're just doing now, right now. I was not able to shoot this. I did put SPX and I pressed stimulate trade, but it was just telling me to wait, nothing coming up. That's the screen I was sharing with you earlier.
Okay, you might have had a slow connection.
Okay, it can be that because it was just taking forever. Because from that class I looked, it was from here you tell us to do that, to state the trade from here.
So anyways, I'm going to put on a put fly. That means I'm going to go over to the right side because that's where puts are. And I'm going to right click somewhere. I don't even know where. I'm just going to guess.
Okay, in the video I saw you counting from I see counting from the bottom. You say one,
I
two,
said
three,
about
four,
seven.
five.
Yeah, I said about 7 strikes
Okay. So
in the video.
you can't in the video first. So you start counting from the bottom, then going up.
But I'm really guessing because I don't know if it's going to be 7 strikes. Look, I'll count 7. 1, 2, 3, 4, 5, 6, 7. All right, here I just chose at random. It's 2 away. That's just as good because I'm going to probably change it anyways. So I just pick somewhere.
So what you choosing now? That's the strike. That's the striking price, eh?
That's going to be the center strike of my butterfly.
With butterfly. That means at that point, that's where you're going to start collecting. Once you get there, you're going to start collecting your profit.
Hopefully.
Hopefully, okay.
Yeah,
Right,
I'm
man.
not thinking that. I'm not thinking that way. I'm just thinking I need to put on a fly and I need to position it and I need to price it so that it's what I want. All right. So the first step is to create a fly. So I
Yes,
just
that
go
one I see.
to analyze by. I don't go to buy,
Right.
go to analyze by, and
Right,
I
then
choose butterfly.
Yes.
And so what it does then is down below, it will create a butterfly for me right here in the green. And it creates the definition of the butterfly right here in the green, right here. And I can go look at it. I can go to the risk profile screen, which is up here and underneath the analyze tab. Under analyze, it has all these sub tabs.
Yeah,
And the
I
only
see
ones
that.
that I use is add simulated trades and risk profile. So I'm going to click on risk profile and here's my trade.
Okay.
All right. The market is right here, right where I just clicked, where that gold line is. This isn't anywhere as wide as I want to be. I wanted it to be 20 to 30 wide. So let's make it 25 wide. That will split the difference. All right. So that means I have to set the lower strike to 25 below the center strike, and then the higher strike to 25 above the center strike. So that would be like this. So now I've created a symmetrical butterfly where each side is 25 wide. So if you were to look at the strikes, so here's the center strike right here. That's this price right there, right here, right there. And then there's my left side and my right side. All right. So this one's at 305 right here. And then this one is at 63.55, which is right here. That's this one.
Okay. And we were saying the wide has to be between 20 to 30.
Yeah. So there's my fly. And then here's the cost of the fly.
Okay, but it has to be 110. Okay, but go ahead.
Oh, it doesn't have to be anything. It's whatever I decide that I want.
Okay.
But right now it's $1.15 based on where this fly is located relative to the market price is right here. That's where the market is right now. It's at 63.74 right there. But the market's going to be moving, right? It's going to move this way and this way. I don't know which way it's going to move. I hope it moves towards my fly. But I haven't created this fly yet. I'm just trying to decide, is this price right here the price that I want to pay for a 25 wide fly? That's the only thing that I'm thinking about right now. All right. Now, our standard is never pay more than 10% of the width. So if the width is 25, that means the maximum I want to ever pay for one of these flies is $2.50.
Okay.
That's 10% of 25. And right now it's $1.25, which is
half the factor. So it's below her target. Which one is good?
Yeah, and from my point of view, that's fine too, as long as it's less than 10%. In fact, I like lower prices. So I have to decide now, okay, is that what I want to pay? And if it is,
let's say now if it was more than what you want to pay, then you're going to wider, make the width.
No,
increase the width.
you're going to keep the width the same. But let's say that it's more than what I want to pay. I say I don't want to pay $1.40. I want to pay under $1. So I want to keep the width the same. So what I have to do is I have to move this entire butterfly further away from the market. I have to move it. I have to move all the strikes to the left further away. So I have to move each one of these strikes. I have to take this strike and move it this way. I have to take this strike and move it this way. And then this strike also down here and move it this way. So I'm going to do that right now. And so I'm going to go down here to the definition. And I'm going to move each one of them 10 points lower. So I'm going to take this one, 63.05, and I'm going to make that 62.95. I'm going to make this 63.30, 63.20, and this 63.55, I'm going to make it 63.45.
Okay, I see.
So now I've moved everything 10 points to the left.
To the left. Now the price come back down to almost 110. I see that.
Yeah, it was $1.40. Now it's down to 110.
Yes, I understand that. Yep.
I didn't make it below my dollar, but that might still be okay. So that's how we do it. And then once I'm satisfied with it, I simply go anywhere inside the green area of the definition and I right click, and I choose confirm.
Send. That's it. And it's in the market.
And then now it's not there yet. It's not there yet until I send it and that it fills. But it's telling me all about the trade here. It's giving me all the confirmation of the trade. This trade has a potential of $2,390 profit, but only $110 of risk. That's pretty good return ratio. That's a good risk to reward. That's about a 1 to 20 risk to reward. And we can figure it out directly by finding out the max profit and divide it by the risk. The max profit of any fly is the width, which is 25, minus the debit, in this case is $1.10, minus 110, which equals 23.90. Divided by the debit, which is also the risk, divided by 110, that gives me 21. So that means almost 22. So the risk to reward on this is 1 to 22. So for every $1 of risk that I take, I have a potential of making $22. Now I can only make $22 though if it goes directly to the center of this strike. That's how I figure out all my odds. I want to figure out what the maximum potential profit is and the lower and the maximum potential risk. And then I look at that ratio and I say, is that where I want to play?
Thanks for watching, guys. I hope you enjoyed the video. And if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's school community.